Good morning. Folks, in this video, I want to talk to you about a little known HMRC tax scheme that powers 90% of the angel investing in the UK today. It's an incredibly powerful incentive that gives significant tax breaks to angel investors across the UK every single year. I'll explain to you exactly how this scheme works, what kind of funds you need to invest in order to be able to benefit, what kind of things you should look for when you're choosing these kind of funds, and also finally, where you can actually find these funds as well. Hey guys, my name is Ibrahim Khan. I'm the founding partner at Curate Capital. We're a venture fund that has invested in over 50 deals with over £10 million invested to date. By way of background, I was a corporate lawyer before I realized the error of my ways and decided to go into venture capital. Alongside Curate Capital, I also run a successful fintech business that helps over 100,000 people every single month. Before I explain to you what EIS funds are all about, let's just take a step back and figure out what on earth this venture capital business is all about as well. So venture capital is investing in early stage startups, those kind of startups where they could actually collapse or potentially go on to become huge businesses. A tiny minority of startups actually kick on and become huge businesses. So the skill is all in getting yourself exposure to as many chances as you possibly can do to getting into those kind of businesses that do spectacularly well. And so this is why a lot of people will end up investing in a fund vehicle rather than investing individually. And the reason for that is because if you invest individually, you are reliant on your own deal flow. And that, if you're not in tech yourself, can be quite difficult. The second reason is because with a fund, you get a diversified portfolio of startups, which you wouldn't get if you were doing it on a deal by deal basis, or it would just take you a lot longer to get yourself a significant portfolio. EIS funds are a specific type of fund that are particularly relevant for UK taxpayers. Anyone can invest in them. It could be abroad, it could be wherever they like, but UK taxpayers get a significant additional tax benefit. You see, with EIS funds, what they do is they invest specifically in Enterprise Investment Scheme, EIS, eligible startups. And that's really just most tech startups will qualify to be eligible for EIS. And what that means is that you will get between 30 and 50% of your investment back as a tax rebate. Here's how it works. So let's take an example of a loss. Let's say you invested £10,000 and you made a complete loss on that investment. Now, immediately after you invest that £10,000, you will get back £3,000 as the tax rebate. Now let's assume that this same startup collapses. You would get an additional £3,150 as a tax relief from HMRC additionally. That means that even though you invested £10,000, in a case of a complete loss, you would actually end up only losing £3,850. That's a great way to cap your downside risk. Now let's think of a more successful example. Again, you invest £10,000, but this time the startup does 4x what you invested and you end up with £40,000. Again, you also get that £3,000 immediately as a tax rebate within that first year or so, and then you have £30,000 profit that you're sat on. Now the benefit with EIS is you also don't have to pay any capital gains. What that means is that you get that 30k profit completely tax-free, and it's inheritance tax-free as well, in case that's a relevant consideration for you. Okay, so you've decided venture capital, pretty cool, EIS funds, very cool because of the tax benefits. How much am I supposed to actually put into this stuff? So this is obviously not financial advice, this is not tax advice, but here are the ways that I would think about it. Let's say you have a portfolio of £1 million, you would want to chunk up that section into different diversified asset classes. A big chunk of it will probably be stocks and shares, and that's usually through your pensions investing and ETF investing. You may have a chunk of it that's sat in fixed income or property, and that's a significant amount of your portfolio as well. And then you've got a portion that is allocated for alternative investments or higher risk, higher reward, longer term investments. And this is very much where venture capital fits in. And having an element of your portfolio that is towards the higher risk, but in a controlled way, is important to give that portfolio that little bit of extra spice or garam masala that gives it an overall better return in the long run. So how much exactly should you be allocating into alternative assets? Well, this is ultimately a question for you, your financial advisor, your life circumstances and your tastes. But usually we see portfolios vary somewhere between 10 and up to 30% is given to these kind of asset classes. Of course, you do get people who are a lot more aggressive or a lot more cautious, and that does depend on your personal taste and your time of life as well, but that should roughly give you a sense of how to think about things. Okay, so you've decided I want to do an EIS fund investment. I want to put, I don't know, £100,000 into this EIS fund. Now, what EIS funds should I go for? What are the things to look for in an EIS fund? The first and most important thing that you should look for in an EIS fund is a track record of the fund manager. Because you see, the track record will tell you a lot about how many deals this fund manager has done, the quality of the deals that he or she has done, and also the kind of returns that they have historically produced. Look for if they've had successful exits. Look into the markups that they've achieved on their previous investments. Also look to see if they've had any complete duds, because having a few duds is actually a good thing. It means that these fund managers are investing in the right types of investment that make the venture capital risks worth it for the potential rewards on offer. If they're just investing in low risk investments and also charging you venture capital fees, then it doesn't really make sense. So duds can actually be a good thing as well. The other crucial thing when it comes to investments in venture capital is giving yourself that access and giving yourself the ability to get into the best deals. Now, that will come down to the sources of the deal flow that these fund managers get. If there are people who have a very credible background and it's clear how they are going to get the best deals in the business, then that's a good tick in their favor. However, if they don't have a clear plan for that, then that's really problematic, because as we said up top, the whole point of going for a fund is that they do have that access to the deal flow which you want to get exposure to. And of course, the other very important consideration with all investment products is the fees. Make sure you properly understand what you're getting into there. And you should watch out for a few things, because there are some hidden costs associated, unfortunately, with the way that EIS funds sometimes present themselves. One is custodian fees, administration fees, fees that the fund manager will be charging to the startup, which is essentially, you're going to be funding the startup and then they're going to be taking that money back. Annual fees that are charged to the startup, transaction fees that are charged from your investment pot, and various other bits and bobs. They all add up to a significant amount. So make sure that you understand exactly all of the fees associated with a particular fund. One thing you should be alert to is that certain EIS funds allow you to invest in them regularly, whereas other EIS funds only raise money once and then close up shop for a year or two and then deploy that capital. So make sure that you understand what it is that you're getting into. A lot of people these days do prefer that quarterly approach just because it's nicer for them on the cash flow. And that actually does improve your overall returns as well, because it means that your cash isn't sat there for long periods of time undeployed. And then finally, of course, you want to make sure that the entry ticket that you're getting into with a particular investment is actually appropriate to what you want to invest. So certain EIS funds may have too high an entry ticket for you. They might say 100,000 or 50,000, whereas others will go as low as £5,000. So make sure you keep that in mind as well. Okay, so now you want to invest in an EIS fund. Where on earth are you going to find a good EIS fund? Well, what I would personally do is look at a comparison website like a Wealth Club website, or you've got a website called Join Further, which is another comparison website, or talk to your financial advisor who should have a sense of the types of EIS funds available for you. You should then look through the offering documents of these funds and mark them according to the kind of considerations that we talked about earlier. And make sure that you consider Curate Capital's own EIS fund as part of this analysis as well. And if you want to find out more details about our track record, the top investors that we've co-invested with in the past, some of our exits, make sure you visit our website and find all of the details there. I hope this video has been helpful. I'd love to hear your questions and thoughts in the comments below. Until next time, ciao.